Hello and welcome to Pro Trader Strategies market commentary for two. Hello and welcome to Pro Trader Strategies market commentary for Thursday, July the 5th. Hope everybody's got their fingers. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on. Across the pond, we got some manufacturing PMI, but it's not the ones we really look at. They look for the flash PMI. All of these PMI numbers did come in line with expectations, though, so we're not really going to go over those too much. Great Britain manufacturing PMI did come in at 54.4, in line with expectations. They don't really look at the flash there, so I'll mention that one. Here in the United States, we got Institute for Supply Management, which is the ISM manufacturing PMI, one of our most important numbers. Came in at 60.2, expected to be 58.2, so higher than expected there. Construction spending in line with expectations at 0.4%. Albeit they did revise last month's number down quite dramatically from 1.8% to 0.9%. So big pullback there on construction spending from the previous month. Not too good there. And then we got, like I said, the ISM Institute for Supply Management, which came out a little bit better than expected. Prices paid increased quite a bit. That not always a great thing to see, especially if they're going to start passing that on to the consumer. All right, on to the overall markets. We've got crude oil coming back off today after testing that 75 handle. Yesterday blasted through the 78 Fibonacci, but we did settle below that Fibonacci extension level. That is going to be a little bit more bearish. Came up and tested that trend channel mid mark. That should be like a magnet, if you will. Bounced off of that because it kind of coincided with that 78 Fibonacci extension and the value area high. That acting as resistance, rolling over a little bit today. We could start seeing some profit taking heading on into next week in crude oil futures. So keep your eye out for that. Then we've got gold futures continuing to move higher again today, up another $6 after going down and wanting to test. I thought we were going to get more serious about testing this Fibonacci level down here, but market came up and away with some of the volatility we've seen in the overall markets. Also, that dollar trade kind of thinning out a little bit might add more upside to gold. Remember, we were talking about people investing in dollar because of China devaluing their currency should cause dollar to increase. More people were doing that rather than going into the gold. All right, so on to Bitcoin, up another $35. Just very complacent down at these levels. I would, like I said, I'd like to see a little bit more volatility down here and some volume, more so even, to pick up these levels. Bonds moving higher. I don't think they have any more room to really go to the upside. I'm also looking at this as being a little bit of a resistance area. It doesn't line up with any Fibonacci, but could be like a little bit of a tweezer top. I think this is where it's just a little overextended to the upside, not a whole lot of room. So I've got a trade on that I added today. We'll talk about here in a little bit. VIX is still in the 15 handle, although it is coming off a little bit with broader markets in the equities moving higher. We've got the Dow Jones Industrial Average up over 120 points. Doesn't look like a big move right now, but pushing up against that 200-day moving average right now. Would like to see it settle above that if you're a bull for sure. That being said, much higher, it's going to kind of get a little bit long in the tooth and probably want to settle down here unless we get a lot of good economic data or something like that, or even bad economic data to make it roll over to the downside. Now onto the NASDAQ. It is up over 56 points right now, almost retracing most of yesterday's loss after coming in finding support on this on that 38 Fibonacci level. This is the E-mini S&Ps. Looks very similar, kind of stuck between these two Fibonacci extensions and right there at the point of control where the most time has been spent. Not necessarily the volume there. The volume is saying it's way down here, but I think there's something wrong with this chart on that. This is where actually the volume's saying way down here, but to me it looks like the volume is up here. I'm going to say that's where the time and volume has been spent. Very comfortable spot for the equities right there. Let's look at the 30-minute breakdown of the E-mini S&Ps. You can see not a whole lot going on in the futures today. Overnight inventory did get long. They flushed those guys out. Now we're starting to get a little bit of a pickup here. Still continue to see light volumes this week, and that usually causes a melt up, if you will, where the retailers come in and buy on the day after when a lot of hedge funds and things of that nature are still quiet. But E-mini S&P is up about 13 points right now. All right, I talked about the bonds getting a little overdone to the upside. This is TLT, which is an ETF for the 20-year bond, basically. So this being said, it's going to track the bonds very closely. I think it's a little overdone to the upside, so I decided to play this to the downside. It is an ETF, but it has very low implied volatility. Therefore, we're going to be looking at buying options in something like this and expecting volatility to expand, hopefully. So in that, I went into the September because I want that long duration, right? We want that long duration so we have less theta decay going on, gives us enough time to, or more time to be right as well. So I went into the September, bought the 120 puts in there for $1.20. Basically, it was $1.21 in my IRA and $1.19 in my margin account. So pretty much right around $1.20 is where I kind of averaged in, I guess, is the best way to describe that. So downside, looking for that in TLT, like to come down and test this value area low is what I'm looking for as a target for this trade here. All right, Procter & Gamble, I've talked about this. It was settling below this 161 Fibonacci extension to the downside. That being said, we are breaking above this tweezer area right now. I'm going to be, like I said, I have a very itchy trigger finger. If it settles above here, I'm going to be out by the end of the day, most likely. So keep your eyes out for that. Procter & Gamble got the ripcord ready to pull on this. All right, it's not looking good. It's going to be a loser unless we can get some market correction. If I can get that to settle below that 161 Fibonacci, I think I can get a little bit of gamma trade going on and get out of this trade. So looking for a little bit of a rollover, and that's what I'm looking for from Procter & Gamble right now. Not too happy with that trade, so I'm going to have a quick trigger finger on it. All right, that's about it for today. Other than later on today, we're going to be having a webinar, and it's going to be on the broken wing butterfly. This is a great strategy, especially if you want to trade the butterfly. This gives you a little bit of room for error to one direction or the other. We're going to eliminate risk to one side. I'll show you how to set that up in today's webinar. So go to protraderstrategies.com, and if you can't take that, take it easy.